Let's talk about MicroStrategy. For some investors, it's this brilliant feat of financial engineering. For others, it's a house of cards just waiting to tumble. But here's the one thing everyone agrees on. It is not just a software company anymore. Nope. It's become something else entirely, a really groundbreaking and, yeah, deeply controversial way to invest in Bitcoin. So let's dive in and really unpack this thesis for you, the investor. This quote from the founder, Michael Saylor, it gets right to the heart of the whole thing. The company's entire strategy is built to do something that's actually pretty hard to do on your own. Get leveraged exposure to Bitcoin without that constant fear of a margin call wiping you out. But how does that actually work? And what are the risks you're taking on? That's exactly what we're going to break down. All right, here's how we're going to tackle this. We'll start with the basic pitch. What's the big idea? Then we're going to dissect the engine behind it all, what they call the Bitcoin flywheel. After that, we'll lay out the bull versus the bear case, the big debate. And finally, we're going to give you an investor toolkit so you can track the key metrics all on your own. Okay, part 1, the pitch. You have to go back to August 2020. MicroStrategy, which was, a pretty straightforward software company, made this incredibly radical pivot. It basically transformed itself into what it now calls the world's first Bitcoin development company. And you have got to understand this dual identity. On one hand, yes, there is a real, profitable software business chugging along, making money. But let's be honest, that business is now completely overshadowed. The company's valuation, its stock price, the entire story that investors are buying into, it's all driven by its second identity, a machine built to acquire and hold Bitcoin. And when I say acquire, I mean on a massive scale. We're talking about a projected holding of over 720,000 Bitcoin. Now think about that for a second. That's more than 2.5% of all the Bitcoin that will ever exist. It makes them the biggest corporate holder of Bitcoin on the planet, and it's not even close. So why on earth would they do this? Well, the core idea is pretty simple. Michael Saylor believes that cash, just sitting on a balance sheet, is melting away because of inflation. It's a liability. His big bet is that Bitcoin is digital capital, that it's a much better place to store value for the long term, protecting the company from inflation while also offering this incredible asymmetric upside, the kind of potential for gains that far outweighs the potential for losses. This isn't just a trade, it's a fundamental shift in corporate treasury strategy. So how exactly do they buy so much Bitcoin? It's not just from the profits of their software business. No, they've built this financial engine, what people call the Bitcoin flywheel, that's designed to just keep on accumulating more and more. Let's get into how this thing actually works. The absolute most critical piece of this whole puzzle is a concept called premium to NAV, or net asset value. All this means is that the stock market is willing to pay more for a share of MicroStrategy than the actual Bitcoin that share represents is worth. I mean, at times, investors have paid $2, even $2.50 for every $1 of Bitcoin the company holds. That premium, that's the fuel for the fire. Okay, so this premium creates this amazing self-reinforcing cycle. Step 1, the stock's trading at that nice premium. Step 2, MicroStrategy sees this and says, great, let's raise some money either by selling new shares or issuing debt. Step 3, they take that cash and immediately go buy more Bitcoin. But here's the real magic, the kicker. Because they raise that money at a premium, the new Bitcoin they just bought actually increases the amount of Bitcoin per share for all the existing shareholders. This makes the shares more valuable, which helps justify the premium, and the whole flywheel can just spin again. Now, depending on who you ask, this flywheel is either totally brilliant or completely reckless. And that brings us right to the central conflict that every single investor in MicroStrategy has to wrestle with, the bull case versus the bear case. And it really boils down to these two opposing stories. On one side, the bulls call it intelligent leverage. They see a company smartly using the capital markets to buy up a world-class asset, making every share more valuable over time. On the other side, the bears call it a death by dilution. They see a ticking time bomb of endless stock issuance and mounting debt that will eventually crush shareholders, especially if Bitcoin's price ever takes a serious sustained downturn. So let's dig into the bull case. First, you get that leveraged exposure to Bitcoin without the terror of a margin call. Second, for big institutions that can't or won't buy crypto directly, MSTR is this perfectly legal, regulated stock they can own. Third, like we saw with the flywheel, the strategy can actually be accretive. It can increase the Bitcoin backing your shares over time, throw in a really liquid options market and a CEO with unshakable conviction, and you've got what could be a recipe for absolutely parabolic gains if things break right for Bitcoin. But the risks, man, they are just as big. The company's fate is tied almost completely to the price of Bitcoin, which we all know is wildly volatile. They've also taken on a ton of debt. And there's a huge debt wall coming up between 2028 and 2032 where billions are due. If they can't refinance that on good terms, they might have to sell Bitcoin at the worst possible time. Then there's the risk that the premium to NAV just disappears. If that happens, the flywheel grinds to a halt. You're also making a massive bet on one guy, Michael Saylor, who has total voting control. And finally, you got all these new spot Bitcoin ETFs, which offer a much simpler and cheaper way to get Bitcoin exposure. So you've got this intense debate raging. How can you, as an investor, actually keep score and figure out what's going on? Well, let's put together a toolkit for you with the most important metrics you need to be watching. If you only follow one single number, make it this one, their average cost basis for each Bitcoin. Sources put it roughly around $75,000. Think of this as their break-even point. If the price of Bitcoin stays above this number, the strategy is, on paper, profitable. But if Bitcoin falls below this level for a long time, the entire strategy comes under some serious pressure. And here's your dashboard. You gotta watch that premium to NAV. If it goes away, the flywheel is in trouble. Obviously, you track the price of Bitcoin versus their cost basis. You keep an eye on that debt schedule, especially that 2028 wall. Then you ask, is the Bitcoin per share actually going up over time? That tells you if the strategy is really working for you as a shareholder. And finally, you watch their capital raises. Can they still go out and get money on good terms? These right here are the vital signs of the whole thesis. Which brings us right back to where we started, to the one question that every investor has to answer for themselves. Is MicroStrategy a visionary strategy, a brilliant use of leverage to build a unique investment vehicle, or is it just a massive, leveraged bet that's doomed to a slow death by dilution if the bull market ever ends? The answer is going to be in the data, and now you know exactly where to look.